All right, welcome to another episode from the Chart Reader. So, I'm going to do a video on the overall market right now, and really, the thoughts haven't been much different, right? Clearly, I was excited, I was hopeful for these three candles right here, but I think more than anything, it emphasizes so many different things that I say every single video, right? We're waiting for confirmation for a reason, and the 8 and the 20 are really critical lines, right? The moving average 8 and the moving average 20 right there, these two right here. So that really was the theme on NASDAQ. That really was the theme on the S&P 500. And that was basically the theme on the Dow Jones. You can see Dow Jones is doing better than both. Obviously, it is over the lines, but man, it's just so tight on these. And that's basically the continuing story, right? I think two big points in my head, and really these are not technical thoughts. These are just don't force it kind of thoughts, right? The first one is, and I mentioned this one on the Discord, right? I referenced a bear, and I realize a bear sounds like a bad thing when you're talking about the stock market, right? Because bears are bad. But look, in nature, a bear does not hunt 12 months a year. I'm not a bear scientist by any means, but I'm pretty sure a bear sleeps more or about the same amount that it hunts, right? And even though it's literally asleep doing absolutely nothing for months on end, the amount of damage and fear and the kill power of a bear is so high that everyone knows to respect it. And hey, if it's black, fight back. If it's brown, lay down. If it's white, good night, right? Like it, that's my bear science max right there. But you don't need to trade every day. There's a Buffett quote. I'm not a big fan of using Warren Buffett quotes because, like, the man's a billionaire, right? Like, I'm a regular guy. His quotes mean nothing to me in a lot of ways. But one thing that he said, I don't know if he made it up, but I know I heard him say it. Look, we're not playing baseball here, right? It's not three strikes and you're out. You can literally take millions of pitches. And to me, that's looking at hundreds of stocks every day across like months on end, right? Like we talk about on the Discord what feels like 1,000 tickers a month. You know what I mean? You can just watch them all come and go, and you're not going to be out if you do nothing, right? But if you just wait for that one to go right exactly where you want it, and you know you're going to crush it like you do most the other times, oh man, that's what it's about, right? That's why the bear waits for the months where it knows it's going to crush it and just sleeps during the other ones, right? It knows it can do so well, it'll sustain it, right? And man, I can't emphasize that enough. I'll be real honest with you. I stopped and re recorded this so many times because I felt like I couldn't say that well enough. I don't even know if I said it that well on this one, but I really hope that back pockets it because I remember back in the day trading in these bad markets. I remember finding these tickers that look like they're going to do well, good setup, ready to go, and then it fails. And I'm thinking to myself, why? Like it wasn't doing that before. Why is it doing now? The answer is the times aren't like we're not in this monster up right now. I don't know if we're in this, right? We're kind of feeling it, right? It might, for all we know, it's one of these and it's about to go back, right? But yeah, we lost all the moving averages here. We've now lost all the moving averages here. Clearly, that was a substantial difference between all of that, right? Even at this point, we're still like, over, right? So, the conditions aren't the same, and waiting for good, boring is better than wrong. All right, I think that's a good way of summing that right there. All right. Hey, I for sure believe everything will recover, right? Even this, right? This was COVID, right? Even oh no, that wasn't COVID. That was COVID. Even that recovered, right? Whatever that was, I have no idea. That was whatever, right? It always recovers. It's just, let's maximize ourselves and just, wait, right? It's not a bad thing. It's not really a good thing for a YouTube dude to say because the real reason we're watching YouTube videos is to find the ticker and go, right? But hey, trust me, there's there's a strategy here, right? And we're not trying to break the strategy for the conditions. We're waiting for the conditions to meet the strategy, right? Like that's the game, all right? So that's a beautiful opening thought right there. I hope you like that, and I'm glad I stopped and tried that a couple times. Um, Real quick, what are we going to do today? Same thing we always do, right? We're going to look at the daily and the weekly. I am going to do some technical things. We have our 5 moving averages. There are horizontal support and resistance lines that I do draw manually myself. And then we have lower indicators here. I'll be real honest though, right? The last couple of videos I've been saying it, I'm almost ignoring all these right now. It is all about moving averages to me. I would say volume as well, but I kind of don't care about volume and I'm looking at an index, okay? So let's get into it. 550. This is basically the technical thoughts. And look, I think I'm going to be kind of quick with it because there's not too much to really go over. All right. I think one thing I want to say, I don't know if I said it in the opening thoughts, but look, I am not using the word crash. All right. When we look at the weekly, right, we still haven't lost the 50 moving average. We still have the 200 below us, right? But those are just 3 dojis under it, right? When I look at the S&P 500, exact same thing. We're actually still over the 50 on that one, right? And I know the Dow Jones is actually still over that one, right? So across all 3 on the weekly, we still haven't lost the 50. We're nowhere even near the 100 and the 200, right? When we zoom out even more and look at the monthly, we're barely the first month under the 8 moving average on the Dow Jones. We're barely the first month under the 8 on the S&P 500. And on NASDAQ, it's a little bit uglier, you know, you can kind of say that, but, you know, yeah, it's still the first month under it, right? None of them have even gotten to the 20 yet, right? So I think it's scary on the short term, and I'm not pretending it isn't, but there's still a lot between crash and where we're standing right now. All right. So, what am I looking for? I think the overall theme across these 3 is the 8 and the 20. All right. NASDAQ is the worst of it, and it does need to get a little bit higher than the other ones do. NASDAQ needs to get back to 18,100. I'm clicking $25 under that, right? But I need to get, not just be a little bit over it, right? I need to nicely get over it. And what I'm basically trying to do is get into these 2 green candles. Basically, this one I'm clicking on, and then this one in like early March right there, right? So 18,050, 18,100, somewhere in that zone will start to once again, like I did right here, make me believe we'll get over these 2 and go back to the 200, right? With the S&P 500, it's actually the exact same story, right? This is a doji on the lines. We really, at the bare minimum, need 5,730, right? I'm clicking at 21, but something around there. Even that is a little tight, but there's a nice little move to 5,760. I would really like this thing a lot closer to like 5,780. If we can start to break into this March 5th candle on NASDAQ, I was actually clicking on, oh, Compass looks interesting. Keep that one in your back pocket. Comp. Sometimes pudgy fingers do good things. NASDAQ, I think it was this one. It was the 7th. Oh, it was the 5th as well. It was between this one and this one. That's the 7th, right? Yeah, between the 5th and the 7th on NASDAQ. We were talking about the 5th on the S&P 500. I think that's the date we want, right? So get me back into that 5,780, and that's a good channel for move up to 5.9 right there, right? Dow Jones looks like the best for sure, but really in a lot of ways it's exactly like the other ones, right? It tries to get over. It definitely is just doji, unable to confirm. Yeah, it's still physically over them, but man, I needed a little bit more, right? I think the one positive is it should be really hard to lose those 3 moving averages. So unless we gap down to 42,000 flat, basically, that should be really hard to lose. And maybe Dow Jones will be the index that says, hey, I've got good enough support to go up, and let's see if the S&P 500 and NASDAQ can follow those, right? So that's what I'm looking for on the daily chart. And really, like I said, the weekly and the monthly are also the same. On the weekly, we don't want to lose the 50. All right. If we lose the 50, it is a bad fall to the 100. And it is green, 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 red, 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 green, green, green to red, 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 all the way down there, right? And you can see, again, it's the exact same drop on all three, right? So we definitely don't want that again. Dow Jones is nicely above it, not fantastically, but hey, it's at least a couple candles above it on the weekly, right? And then again, on the monthly, don't lose the 8 moving average, right? This month is basically over, right? We are a Monday away from being the end of the candle. What needs to happen next month is come back to the 8 moving average, right? That's really what needs to happen. Otherwise, April will start to head to the 20, and that will ripple on the weekly and on the daily. All right. So again, at this point, all three of the indices, I'm just gonna flash it real quick, right? This is Dow Jones. It's gonna close like we're a couple days away, right? Like on Monday, Monday is the last day of the month. This is the end of the candle, and then come Tuesday the 1st, the new monthly candle will open, right? So Dow Jones seemingly is gonna close under, right? S&P 500 is going to close under, and it better come back to 5,800 by end of April, right? And then, like we said, NASDAQ's the ugliest one, right? So this one better come back to the golden line. Otherwise, man, for all we know, NASDAQ might find itself at like 16 flat come end of the month, or yeah, end of April, right? So, yeah, I think that's pretty good right there. Look, I'm not talking a lot about specific tickers because it's hard, right? If you want to do tickers, I mean, I think inverses are a good place to look. If sqqq can get over the 200 moving average, there's a lot of red, red, red to green, 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 and you can see my lines up there. SH is another one for the S&P 500. This one's actually trying a little bit better to get over that 200 moving average, right? sdow is one for the Dow Jones, and again, you can kind of see the theme here. Again, we've been saying Dow Jones is the best, right? And that's why Dow Jones is the worst of the inverses, right? But again, you see how that plays out, right? And then, hey, if I was going to share a ticker, CCG caught my eye today, but again, what would normally do well in a good market might not here, right? I like the fact that this thing tried green, green, green turned into red, 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 but it seems like a moving average caught it and it's trying to hold it, right? But the real question is volume going to hold? Is it going to keep going like it has, or are we just going to dump again and then drop, right? So in a good market, man, I would like this thing a lot more. It at least caught my attention, but again, a good setup in a bad market is not the same as it was, what, 5 months ago, 6 months ago? Let me know your thoughts. Let me know your opinions. Even if you disagree, hey, I appreciate you so, so much.